cash flow, number one, is people might just look at the total income from the property, say, hey, I'm making the property rents for $2,000 a month times 12 months, $24,000 for the year. Okay, that's definitely not cash flow. Okay, at a minimum, even if the property is paid off free and clear, we're going to have taxes and insurance. Bare minimum. Okay, so if you're hearing that as cash flow, you throw that one out right away. Sometimes you'll hear someone talk about the NOI, the net operating income. Now, this is a lot better number because we're actually accounting for a lot of the expenses. Usually, though, when we're hearing the NOI, it is not accounting for any debt payments. So we might say, okay, that same property, I have $2,000 a month coming in, but I'm having to pay someone else to manage the property for me. So maybe I'm paying 10% for that. Maybe I'm responsible for the lawn care, so I'm paying $100 a month for lawn care, and some other little pieces like that. So we start adding those up and subtracting those out, and certainly when repairs come up, having to subtract those. Now we're starting to see more of a net operating income. Still not the best cash flow, but a lot of people will use this. The next cash flow you might hear is somebody might just look and say, we'll keep the same $2,000 a month property example. It's going to be $2,000 a month of income, and they might just talk about, well, what's your principal and interest payment for the mortgage, or maybe even include the taxes and insurance for the PITI, principal, interest, taxes, and insurance. And we say, well, the PITI is $1,200 a month. They might say, well, you've got $800 a month of cash flow. Again, not the best, because as we talked about a moment ago with some of the NOI, we'll have other expenses. We're going to have maintenance, we're going to have repairs, we're probably going to have property management, unless you plan to self-manage the entire property.